Hello, I'm Finola Burke from RaaS Research Group, and today we're catching up with Dimitri Courtelis, the Group Chief Financial Officer for Ricegrowers, which trades as SunRice, ASX ticker SGLLV. Thanks for joining me, Dimitri, and welcome back.
Thank you, Finola. Good to chat again.
Well, SunRice has reiterated its guidance that the full year results, the FY25 results, will broadly match FY24, and that investors should see moderate growth in EBITDA margins. From where you sit today at the halfway mark, what are some of the tailwinds, headwinds factored into your guidance?
Yeah, sure. So again, we're seeing some positive growth in the crop price segments. RFG, our rice food group, has also had some good growth in the first half. That was incremental flour sales that we were able to get away. Back on crop price, the animal nutrition side of the business has been delivering to plan with the recent acquisition of SaverLife. That's going to help bolster that position going forward. We did previously manufacture for SaverLife, and now we've bought the brand. So that's an end-to-end vertical integration of that position. And Riviana also starting to improve its baseline earnings as well. And of course, on the international side of the business, we continue to deliver in market and look to new market opportunities. So that's certainly underpinning the tailwind side of things. And to the other part of your question on the headwinds, we're dealing in an environment now with the volatility of FX, obviously the recent depreciation of the AUD against the USD, with the talk of Trump coming into power, and the speculation rather in terms of his policies and what that will mean for the markets. I think the market's pricing a lot of that in, and there's obviously still uncertainty until he comes into office. So that FX will put a bit of strain on our import business. But with a lot of these positions, we're already essentially covered for this year. So it's more of a forward type of navigation on the year into FY25 and rather FY26. So the relatively balanced. It is a business where we deal with a number of complexities and moving parts, but certainly where we sit today, good to reinforce the outlook position that we had at the full year in terms of that continued marginal growth at the top line, but certainly starting to see that margin improvement at EBITDA. Tax obviously been a little bit of noise, as we called out in our outlook, because we've made more money in jurisdictions with a higher tax rate than in last year, for example. So not a step change in the business model by any means, just more of a case of how this year is likely to turn out.
And from our perspective, the H1 FY25 result saw a better than expected EBITDA result from rice food and crop rice. In the past, you've actually done a lot of work on supply chain efficiencies. Are we still seeing this in the results, or is there more to come?
Yeah, so that certainly helped the results in the first half. In addition to the way we take our product to market, we've really just looked at the supply chain and operational positions to ensure we're looking under every rock that's out there to ensure that we're taking those opportunities as they come, whether that's in procurement side of contracts, logistic positions, warehousing as well, and the way that we look at our supply chain strategy. So it's fair to say that should continue through the course of the balance of this year, and then help to enable the years beyond, because from a baseline perspective, we'll have that ingrained in those business units going forward. So again, it's all about looking to grow top line, and certainly on the operational side of the business, making sure manufacturing efficiencies are best in class or working towards best in class so that we can extract that value.
Dimitri, in rice food and Riviana's case, I mean, are those businesses benefiting from consumers staying in to save money?
Yeah, so there is a trend of staycation, or that cook from home type of experience that we've looked to play into. Riviana is a good example. Our pizza bases are some of the best in the country, and based on consumer insights and research that we've looked into. And still, if you're at home making a gourmet pizza with our pizza bases from the Toscano range, with all the ingredients, it's still going to be a cheaper outcome than going out there and getting a gourmet pizza from a restaurant. So it's certainly, in our minds, much better quality than the pure takeaway, and still creates that opportunity and that trend at home for shoppers in particular to experience in that what we call a fake away or a staycation. So with RFG and the products in Riviana in particular, that's playing into that space, and we're monitoring the consumer trends very, very closely accordingly.
You just touched on it before, but the tax rate has ticked up to 28%. Can we expect to see it stay at these levels? And how much has that rate been impacted by the mix of your international businesses, and what can we expect to see going forward?
Yes. So if you look at our segment results in particular, half year versus half year, we've got almost 60% of our profit in the current half generated from businesses that are exposed to the Australian tax rate of 30%. So RFG, CopRice, Riviana, and corporate. And when you look at that same ratio, last year it was closer to 50%. So it's not a case of the international position subsiding or going backwards. It's more a case of where we've generated profit. It's been in those jurisdictions with a higher tax rate. So it's fair to say the full year of FY25 will experience the same ETR and from an outlook perspective, and that's what we called out in our guidance. And where that settles going forward, we'll of course update the market accordingly. But certainly a step change compared to where we were in the prior period.
And Dimitri, you called out before we've seen a significant drop in the A dollar against the US dollar. What impact will this have specifically on SunRice in the near term?
Yeah, so that would generally be a positive to our export book as we export Australian rice into our international markets and sell that in US dollars, and obviously procure that in Aussie dollars with the rice pool. But equally, it will be a negative to our import book as we procure our products from overseas, whether it's in euro and in USD in particular. So Riviana and RFG and elements of global rice will be impacted by that AUD depreciation. And we'll look to see how we pivot and make sure that we absorb that. And it's not new to us. We've been there in the past. But again, when you look at shipping conditions and the Middle East market, whilst not FX related, it obviously all plays into our COGS accordingly. That's certainly more consistent with where we would like to be. It's not good, it's not bad. It's plodding along in terms of the region in particular. But the FX will weigh on some of those import books, and that's factored into the outlook which we've taken into account.
And you've reduced debt to almost 3-year lows, and it's now all seasonal debt relating to working capital needs. With the balance sheet in good shape, are you tempted to look at more acquisitions as they present, or are you more focused on capital management initiatives?
Yeah, it's fair to say it's a reflection of where we've been over the course of the last 3 to 5 years. We certainly have a strategic acquisition pipeline, and M&A has been a core pillar of the strategy in the past and continues to be going forward. Inorganically, we do expect to grow down the track as we have in the past, and it's just that balance between organic and inorganic growth. But again, pleasingly, we've seen the acquisitions of SavourLife in the last few months, Simply Delish as well, which is a much smaller operation, but that manufactures some of our Rose's products in Riviana. So that was just a natural segue into bringing that into the tent. And to your point, or your question rather, that certainly where we're turning our minds into the future as well. So we're primed to look at opportunities, obviously with the environment both domestically and internationally, talking to our strategy and looking to see where those opportunities arise. But it's certainly a core component of our strategy going forward.
And SunRice was recently added to the S&P ASX Agri Index. Have you seen a pickup in investor interest as a result?
Yes, so liquidity has picked up, and that was one of the hurdles or requirements to enter into that index. So we're certainly very pleased to see that that's happened, and liquidity has gradually improved. And again, when you look at the share price developments and the TSR in comparison to the ASX 300 in particular, we've outperformed that over the last 6 months. And when you look at the 5-year chart that we have in the investor preso, it also talks to that as well. So again, pleasing to see that investor interest pick up. And as we further and further talk to the market and explain the SunRice story, I think it's fair to say investors are wrapping their heads around what on the surface is a complex business model, but one that is starting to demonstrate consistency of earnings. And when you look at the track record, that speaks for itself. And on the liquidity point, last week, in fact, we had one of our largest liquidity days since listing on the ASX, just with normal daily liquidity of over 100,000 shares traded. So that's the better part of $1 million of daily liquidity on a single day last week, which again, we've got to try to do that for 6 months in a row. It's a different story, but great that we've achieved that. So hopefully there's more of that to come.
Well, thank you, Dimitri, for your time today. Looking forward to catching up with you over the course of the next 12 months to check on SunRice's progress.
Thank you, Finola.